traders, Sage FT from the live trading desk. How are we? Let's dive right into Sunday night review and rev up. First thing, let's take a look at what was the news that we had last week. Now, these were all of the expected announcements, right? But here, Wednesday, around 11 a.m., they decided to pop the fact that they were revising down the jobless numbers. I don't know which one they were to be accurate by 818,000, whatever they were doing there, right? So that's going to set the week off. FOMC minutes at 2 p.m. and then you had a 20-year bond auction at 1 p.m. That was all Wednesday, right? So if we just kind of look at the landscape here, there was no real catalyst until Friday. Jerome Powell started to speak. All right, so that's going to set the landscape for the week. Last week, let's take a look at what we're looking at here over on, I had it all set up. Okay, here we go. Let's look at the daily chart. All right, so now let's look at the premise, right? So here's last week, Monday, Tuesday, Wednesday, Thursday, Friday. Perfect. There's a lot of green bars as we come into the week. So anyone that's looking to short is going to be the counter trend. The reason we say this is we are back into position one on the daily KISS chart. You can see it here. We've got a green 200 simple moving average moving up and increasing at an increasing rate. And now we have the 20 period simple moving average increasing at an increasing rate while we have price increasing at an increasing rate. Even as we came in Monday, it was starting to shift. Okay, so now the hurdles that we were looking for before this were here, and this area here. You can be picky and say the top, or you can say, okay, well, I think it's blank. Now, the way that we want to look at this coming into the week is, let's go to the 4-hour chart. Let's see where we're at. All right, so here's where the week started. To me, this is very, very bullish. Very, very bullish. It closes up on its highs on a small bar, not really sure what to do. Comes in, fills the gap back to the 8 EMA, and then we are off to the races to the upside again. Okay, now, here's where people got lit on fire. The Twitter shorts got annihilated, right? So think about this right here. We talked about this the whole time. And so Thursday, and then coming into Friday, they bought green, and closed the last bar green, even though they tried their dangdest to make it very, very red. So how did we play it? Well, let's look at the 15-minute chart, okay? Here's where the week started. What I want to point out on this 15-minute chart was until the 22nd of August, we were position one since August 8th. Position one to the upside, August 8th. All through this time, all the way until the 22nd of August at about 1 p.m., 1:30 p.m. All right, so now that shaped how we were going to play all week long. Upside only on pullbacks when the 8 crosses through the 20. So here's what I mean. We only want to trade when it looks like this. Let's sit here in silence and let's think about this for just a minute. Do all of my trades look like this? If they don't, why not? Okay, let's carry on, right? Because this is actually the most important thing, because we can pull up the 2-minute. Okay, so now we have the 2-minute KISS chart, and I can show you the same thing.
A few moments later.
Perfect. That's going to need to be resized. Well, hopefully I got it right there. Okay, so now moving this out of the way, what I want to do is I want to take a look at the volume profile, because we talked about it significantly, where why do they keep making the VPOC high and tight, or in not only high and tight, but look at what they did down here. Look at the VPOCs, low and tight, skewed left. Okay, low and tight, skewed left. Okay, double distribution, VPOC still skew left. Okay, this is the weird one. This is high and tight, skewed right, top of the range. Okay, they were still accumulating here. Look at that. They caught some people off guard here, right? Because everybody thought this was probably the bottom of the market, but it was just too thin here. So if you look, accumulation starts here around 5,200, gets real thin down here. See how it changes. Look, it was thin. Where was that? Up here. Now look, it's thin down here. So that means it got ahead of itself. All right, so now if you look, it starts to accumulate. They think that they're distributing and this is the top, but somebody said, I'll take those. Thank you. I appreciate you. And the way that you can tell that is, look, they just keep taking the inventory. They just keep taking the inventory. Now, they try to distribute the inventory, but it looks like somebody accumulated it, right? Skew left. We don't deny the statistical relevance. Okay, this is more of an equal distribution, if you ask me. Let's go ahead and look at Thursday's equal distribution. Take a look at this. You can't really slope in any one direction, so you're going to say equal distribution, right? Okay, well, so then what's the outcome of the equal distribution? Well, they gave it the old college try to the upside, and looks like they accumulated afterwards. All right, so now, how did we trade it on the 2-minute chart? Let's just zoom out, and let's see what catches our eye. Okay, Thursday night, Friday morning, Friday, they caught it, and now they're going to try to give it the old 1-2 to the upside. Now look at how this was just not. This week was a hangover from the past 2 weeks' price action of wide ATR, wide range, very, very high spike volatility, and then right back down into low volatility. Absolutely textbook long trap on the VIX, short trap on the VIX if you're looking at it in terms of the stock itself, the underlying stock. But you can see that there was nothing regular. Is that the right word? Regular? There's no regular rhyme or reason to this besides the wider pattern of daily bullish back to position 1. So now what you're looking for is, on the dips, do they buy it? So far, yes. Now, could that change in a fraction of a second? Yes. So let's look at what we're going to be focusing on next week. Let's start with the news. Okay, in the news for next week, this is rather important, right? We coming into that week of the month, right? Monday, we need to start watching these numbers more and more. See how they're starting to turn orange from yellow? Now the reason is, as they're scuffling about the can people afford stuff and is the unemployment really what it is, nonsense narrative, right? Does it become harder to purchase core durable goods and durable goods orders? Now, so this one is housing data, right? So this is the S&P 500 Case-Shiller Composite 20-year information. Okay, and then where we get into the thick of things is 8:30 Thursday morning, preliminary GDP, unemployment claims. Okay, and then Friday morning, again, just like every month, we get the core PCE price index. We want to know if these numbers are getting bigger or smaller, and how does the price react to the numbers. Now, the way that I trade the news is I wait for my pattern to repeat after the news comes out. Yeah, but Rev, what if it... No. So if we go to the charts, if we pull up the charts, what I'm looking for, let's go to the 4-hour chart. This is the easiest way to see it, right? So here's where last week started. But if we go out, we're looking pretty bullish here. So where are they going to trip it up? If you ask me, here's where they pulled the liquidity the fastest that we haven't reclaimed already. We've already reclaimed this. This got smacked up, okay? So now, if they blast through this, the next level that you're watching is 79 to 57.04. If we don't know. Okay, so let's look at the downside. Okay, if they start to take things out, you'd have to go back to this level over here, which would be 54.92 to 55.26. Now, let me explain why. Because this is where they removed the liquidity the fastest underneath. Okay, so the market trades from liquidity pocket to liquidity pocket. The way that you can tell that they've removed liquidity is a large green or red bar. There's 2 ways to remove liquidity. If we're looking at a large green bar, the first way to remove liquidity is to purchase on the offer, meaning hit the market button. That's the first way that removes liquidity. The second way that removes liquidity is to remove the offer or remove your offer, meaning if you have an offer, you place it at a higher point by removing it and changing the price. Those are the 2 ways that we remove liquidity. And so if they search between the removals of liquidity for pockets of liquidity, meaning where does somebody want to buy and where does somebody want to sell, that is what we're looking for. The reason that they do this is because if you have 50,000 contracts that you have to purchase, you can't just hit market. You're going to get a bad fill. You're going to change the market landscape and dynamics. You will remove the liquidity too quickly in the very, very short term, so it will give you a bad fill. So where would we want to place our large orders? Good. Where everybody else, meaning the losing traders, stops would be. So where would that be? Right above here for the shorts, right below here for the longs, right below here for the longs. So if they're trying to get long, they being the large institutions, banks, hedge funds, hedge positions, mutual funds, it doesn't matter which. Anyone that's trying to trade with size, because the futures market is used to hedge positions, right? The stops would want to put their orders in where they know that the liquidity would support them, meaning if a bunch of traders have a stop down here, somebody's going to put a limit to purchase order against those stop orders. Like the short on YouTube of the guy going, why don't you try to put your entry where your stop is? Okay, so now let's look at the top side. Where would that be if we just ran the stops of these people here, wherever you want to look at it? Ouch, reclaim, boink. Where would it be over here? Okay, so the next level, 56.29. Well, they took that out. Okay, so then what? 56.64. Oh, did they take that out yet? Oh, that's where we're at right now. Oh, okay. So if they ran those stops, well, then we're looking at 64, 65, 75. Okay, this is where they really started to ramp up removing the liquidity. Let me show you. This is where they ramped up removing the liquidity. 57.0425, and then your all-time high of 21.25. Now, folks, I am not saying that we are going to all-time highs next week, but there's no reason we don't. If it's not next week, it's the week after. Okay, now, unless this thing turns down, swan dives back down into this level here. Now, here's the deal. A retest of this would be very healthy for the market. It would allow more participants to get in. Okay, but I do want to show you this last thing here. I want to show you. There's no way we hit this target up here. There's no way. I'm sorry. There's no way we hit a 368-point trade. Everybody have a great evening. We'll see you Monday morning, 8 a.m. at the live trading desk on YouTube. The channel is the live trading desk with Sage FT. Come join us. See what the hype is all about. See you there.